It's Brian Preston, the money guy.
Payday loans and rent to own.
So I think this one you could have done your
rip off.
There you go.
Because here's the thing. We actually sent intern Dan. By the way, intern Dan is on vacation. But before he went on vacation, he had a well-earned undercover task.
Okay.
I feel like we ought to like don't some Mission Impossible music or something because we really did send intern Dan out into the front lines to get us information. Because here's what I realized: payday loans. We all know it's a bad deal.
Yep.
You hear things you like payday loan. But I was like, Bo, I don't know really how payday loans work. I don't know what they charge. Mm-hmm. You know, I can find articles.
I mean, this is kind of confessional on us because it's not something that we've dealt
wealthy
with a whole
people.
lot.
We work with wealthy people. We have resources. I have never dealt with a payday loan because I don't think wealthy people struggle with payday loans. So, but that doesn't mean we don't need to cover and talk about it. And then every day when I drive to work, we're in downtown Franklin, Tennessee, which is just south of Nashville. We're one of the wealthiest communities in the country. Sure. And I drive right by a payday lender.
Every single day on the way to work.
I have to qualify that based upon intern Dan's research. They're not payday lenders. They offer flexible loans.
Oh,
they are a flexible lending source.
Flexible
lending source. So let me tell you what intern Dan found out in his undercover investigation. So he reached out to 2 local lenders because we told him to. We kind of pushed him forward and made him do this. The first one refused to give him any information. I think he could sense. Now, he did not call from our caller ID because I was like, they hung up on you. And he's like, yeah. I was like, did you call from our phone number? Did they
shows up
Abound Wealth on the caller ID? Is that what they hung? Because no, I was smart enough. I called from my own phone. But they first one would not give him any information as he started asking questions. That is a clue something's probably not right.
Okay.
Second one did give him some information. Not all of it, but we got enough before they kind of clued in that Dan was kind of getting information here. So here's what Daniel was able to find out. This is their quote. Usually, because he asked what the fees were, usually it only costs 77 cents per $100 borrowed per day.
Oh, well, 77 cents per $100, that doesn't sound so bad. That sounds minuscule even.
Fortunately, we own a calculator. Because if you do 77 cents a day, for the whole year, that's a 281% interest rate.
281%.
Why did they lead with that? That's the flexible loan. That's not a payday. Payday loans are bad, but flexible loans much be better at 281% per year. It's only 77 cents per day on the $100 that you borrow.
Unbelievable.
So, and you can, by the way, the loans can be as little as $25. Who is borrowing $25? Up to $4,000. These things are straight up a ripoff. You are a loan shark at these places, and I don't understand how in one of the wealthiest communities in the country, we have one of these things. I could go probably jog without breaking too much of a sweat, and I could hit this place.
Yeah,
it's just right over the street here.
Yep.
So that's
But
horrible.
what did they say? You can get the money the same day. That's what they tout. You don't need a credit check or anything, just proof of some sort of income, and then they run an algorithm to determine how much you can pay back. The fact that it's that easy should tell you something's not right about this. Something just doesn't smell quite right.
So you must be thinking, well, if they have one of these in this wealthy community, I just went to Dollywood this past weekend. That's a whole other story. Saw a bunch of payday, same company that's here. I saw on my way to Dollywood. And you say, well, somebody's got to be stopping these things. So here's what the research shows on some payday loan stats or flexible loan stats.
Okay.
Is in the past 2 years, 11% of Americans have taken out a loan with one of these organizations. That's 1 in 10, Bo.
Hold on.
1 in 10.
So here's what I said. Our team has grown here. We're now in the double digits on our team here at Abound. And statistically, if you went around one person on the team,
there's no way anybody. I would be so disappointed if I found out anybody from the Abound Wealth team ever had a payday.
I agree.
Like I said, you just don't.
But just think about that. 1 in 10. That is an alarming statistic to me. But I bet it's not 1 out of 10 of Money Guy listeners. I'm willing to bet that that's not the case.
Before I give you the Money Guy way on how to avoid these things, let's talk about another sibling to payday or flexible loans is rent to own.
Okay.
These things are everywhere too, by the way. Because I think there's industries that you know are in your neighborhood, or you do like there's no way that's near me. But then you do a Google search and you just type in rent to own around me, and you're like, there's 4 of these places within 5 miles. How is that possible? Rent to own.
How does it work? What does rent to own mean?
Well, I mean, it kind of it's pretty these are the rental places. Instead of you owning your already horrible purchase of furniture
Right.
and electronics. Because we all have boxes of electronics that we just ought to throw away
Right.
because things get obsolescence happens so quickly.
Yep.
Instead of owning those things and losing rapidly, you could rent them. So you could pay for them for many times over,
you
and
get to
many
keep the joy
months.
of
It's
paying
just
it
the
over and
gift
over
that
and
keeps
over.
on giving. And we actually, intern Dan did a great slide. PlayStation 4.
Okay.
Now, first of all, once you get busy, look, I love video games. So don't read too much into this. But as soon as I had kids, I kind of quit being able to play video games.
Right. You just got
It's
kind of
just
got
you
busy
get
doing other
busy. You
stuff.
get busy with life, and you get busy being productive. So, I found out that a PlayStation 4, what does it cost, Bo?
PlayStation 4, if you wanted to buy it outright today, you could go buy it for $368.99.
$368. But if you want the convenience of turning this time suck into a horrible rip-off decision, just go rent it at a place. We looked this up. We had intern Dan also do some undercover research on this. And what does a PlayStation 4, if you want to rent to own it,
Well,
cost?
here's the pitch that I would give you, right? Instead of owning this thing for $370, because who wants to spend $370? If all you want to spend is $100, you can have this PlayStation today. Then all you have to do is pay me $100 every month for the next 12 months.
Wow.
And you can rent to own a PS4 for $1,199.
So you're paying over 3 times what it cost.
Simply to pay 1/3 of it at the time of purchase.
You can do this. It's not only with PlayStations, it's all kind of electronics that you make bad decisions on. Like a Galaxy 8 notebook is $3,200, $3,100.
I think that's like 3 times what that costs normal, right?
All these things are horrible decisions. So let's talk about what the money guy way is. How do you, obviously, guys, avoid payday loans, avoid rent-to-own programs? This is predatory programs and lending. This is the lowest of low.
And it preys on people who have nowhere else to turn, right? So if you've had to use this or you're in that situation, this is not so much an indictment on you as the fact that there are predatory folks out there that are willing to take advantage of you. So we want to talk about how can you prepare yourself to not be in the situation where your last resort really is your last resort.
So we kind of created a real quick checklist.
Okay.
Now, Bo put one on here that I thought was kind of mean. It's the first one on here. It's in all caps because that's his input, was have an adequate emergency fund.
The best way to avoid having financial emergencies is to have an emergency fund.
That's a duh. So, you if you don't want to do payday loans, just have an emergency reserves. But we're number 2 is you probably, whoever you owe the money, if you're in such dire straits that you're in a bad situation that you think you might need to do a payday loan or a flex loan, whatever they're calling these things, it might make sense. Like if it's a credit card company, call them. If it's the IRS, you can set up, it's not ideal, but you can usually ask for a payment plan from whoever you owe the money to, and usually the payment plan is going to be better than the flex loan.
That's right.
Because what happens is if you're living paycheck to paycheck where you need these things, you go get behind because you're thinking, okay, when I get my next paycheck, I'll get caught up. But you never get caught up. You just start digging. You
not
dig,
at 281% interest.
It's just bad. So then if you can't get a payment plan, go to a credit union. Local credit unions sometimes have even more flexibility than your normal brick and mortar banks. And we work with a number of credit unions. They really are kind of they've taken the place of a lot of neighborhood banks as your credit union. So go check that out. Peer-to-peer lending. Look, it's going to be higher interest rates. If you think about like Lending Club, there's another one I'm blanking on the name of it.
Why don't we put that in the
But
notes?
the peer-to-peer lending is a big deal. It's the rates aren't great, but it's going to be much better than what you can do.
But it's not 281%.
It's not
That's the thing we're trying to avoid.
I hate to say it because if you're one of these people that gets asked, you need to treat this as a gift, not a loan. But you could ask family members.
That's right.
If you're in that much of a dire situation, help from family. But like I said, if you're the one being asked, treat it like a gift if you're going to give them the money, because lending money to relatives is usually not a great proposition. You can ask for an advance from your employer. If I found out one of my employees was in this much of a dire situation that they're willing to go do a $25 to $4,000 loan and pay 281%, I would gladly help them out. So go to, and I bet a lot of your employees would do the same thing. Then you're in a bad situation if the credit card is actually a better choice than going to a payday loan.
When we talked about it, the average interest rate on credit cards right now is 17.76%. And as bad as that is, It's better than 281%.
And then last, credit counseling. Because guys, you got to get yourself where you never get in this situation again. So go educate yourself, get yourself in a better place. Do not do payday loans, flex loans, or rent-to-own places. They are a disaster, nothing good. It is truly rip-off.
Now, this next one is one I think that when you hear this, I think your ears are going to perk up. Because you go, whoa, I didn't have to worry about a lot of those other ones, but this one, whoa, I have some interaction with this one.
But we have a system to make sure you're doing it right, too.
Of course we have a system.